My name is Ben Repond. Welcome to my YouTube broadcast. Today is December 27, 2023. We're nearly at the end of the year. I'll begin with a comment on the market for this past year. This past year has been an interesting market. It's been a very positive year for most assets. If you're invested in the market, in the broad market, the S&P 500, or even the Dow, or the NASDAQ 100, or individual stocks, probably, in most cases, you have done well. The broad market, the S&P 500, is up about 20%, 20% plus. And so that tells me that most stocks are probably up. I'll give you some detail on that coming forward. So I hope you were able to participate in that. What has been remarkable, now the whole year has been positive, mostly. The one exception was the third quarter. The third quarter was down. I shouldn't say third. It was actually August, September, and October. And other than that, you'd have to give just, very solid marks to the market. As we've had a very strong November and December, it feels like, keywords, feels like we're going into 2024 with some momentum and the market is going to continue to go up, at least in the short run. I hope that is the case. I try to stay out of making predictions, and I won't predict that, but I would say it does feel like there's enough momentum to carry the market into the first quarter of 2024. So when we look at 2024, it is an election year. And of course, this comes around every 4 years. The election years generally, the incumbent party usually finds a way to goose the market so that it goes up to favor the incumbent party at the election. So I would assume because of that, at least up until November, that we're going to have a positive market. What I read a lot is that the market is probably going to have a very up and down, a very rocky, highly volatile year. But even if that's the case, I still think it's going to be positive for a number of reasons. One of those is interest rates are coming down. The Fed has already signaled it looks like they're not going to raise rates, and the next thing on their agenda is probably to start reducing the Fed rate. That's very positive because they've been going up for so long. And of course, inflation is coming down and the job market is strong. So there's some trouble, brewing in the housing market. But other than that, I'd say a lot of signs are positive. So I would say looking forward into 2024, you can write this down and tell me I'm wrong if I am. But I think it's going to be generally positive. And I also think it'll be a rocky ride. Okay, so let's get into the dashboard. I will report on what's been going on, and you can take a look. It continues to be an interesting year. In the yellow box is last week, and there are 4 equity indexes in this box: the Dow, the S&P, the NASDAQ 100, and the Russell 2000 Small Cap Index. These are ETFs listed on the far left of the chart, and the names are in the second column, and the performance in the yellow box is last week. When we go over to the pink box, you can see the performance for the year to date, and that's kind of how they're ordered. NASDAQ 100 up 53%. I don't expect that to repeat in 2024, but that was an excellent year. The S&P up 23%, an excellent year. The Dow up 15, small cap up 15, developed markets up 13, Dow up 12, emerging markets up 3, and the long-term government bond has rallied actually. It's done improved and is down only 1%. It was down much, much more at the beginning of the year. And on the far right, you see the how they are relative to their 20, 50, 100, and 200-day moving averages. If they're above that, there's a green dot. If they're below that, it's a red dot. So other than one red dot, they're all positive relative to those moving averages. Again, a very bullish sign. There were 27 green dots this week, and last week there were 28. So at least for now, we're in positive territory. These are the sectors in the S&P 500, 11 sectors. And in the yellow box, you can see that there are 3 that are negative for the week, and the others are positive. Year to date, there are 4 that are negative. So these are 4 sectors that are negative for the entire year, a very bullish year, but 4 component parts of the S&P 500 are still negative. And of course, there are, of the 4, then there are 8, and of course, that would be positive. And you can see those, starting from the technology sector, the consumer discretionary, and then retail, industrial, it drops on down after that. When you look at the green dots and red dots, we've got 41 this week. There were 40 last week that were positive out of 44. So again, a good week. When I look at the S&P 500, I look at, this is the weekly chart showing that how the S&P is done each week. So one move in this chart equals 1 week. When you go all the way back to October of last year, so this would take us forward about 14 months, I draw the black arrow showing the direction of the S&P, and then I take a shorter term view, which is the red arrow at the very end, which would be the last couple of months. So short-term positive, long-term intermediate term positive. The S&P 500 has 2 kinds of stocks in it, growth stocks and value stocks. Every stock falls into one of those 2 categories, growth or value. There is an ETF for the S&P 500 growth and ETF, exchange traded fund, for the S&P 500 value stocks, SPY-G and SPY-V. I drew a black arrow because the long-term view, intermediate term view, since the beginning of the year is positive. However, the other view, which means that favors growth. In other words, it's been a growth stock year. But when you look at the last, 2 months or so, the last couple of months, when it goes down, that favors value. So value stocks have been more in favor for the last couple of months than growth stocks, although for the year, growth stocks have done well. And this is a broad category. So this would be all growth stocks and all value stocks inside the S&P 500. This is an interesting story and tells a very dramatic tale, and that is that over the year, large cap has outperformed small cap. As again, it's a relative strength chart showing the numerator being large and companies and the denominator being small companies. And so for the year, it's definitely gone up. However, the bigger story, in my opinion, is for the last 2 months or so, look at that red arrow that's coming down. That is showing the rapid rise of small cap stocks. So when it goes down, it's favoring small cap. When it goes up, it's favoring large cap. And so small cap, it's not that large cap companies have done poorly, they haven't. They continue to do well. It's that small cap companies have so outperformed them for the last couple of months. They're sort of catching up because small cap was so out of favor for so long last year and most of this year that all of a sudden it kind of caught wind and is taking off. So it's the relationship of small cap to large cap. So if you're in small cap or you watch small cap, you know what I'm talking about. It's done very well lately. Government bonds. This is the exchange traded funds, TLT, which is the 20-year government long-term bond. And it's not a relative strength chart, it's an absolute chart. And you can see over a 42-week period that, no question, bonds have been out of favor. However, again, for the last couple of months, you can see by my red arrow at the end of the chart, government bonds, in this case long-term bonds, but the short-term and intermediate term have done the same thing, is they've continued to go up. So is that going to continue? It might. I don't know. I don't know the future on bonds. But I would say the long-term picture is negative, short-term view is positive. The dollar continues to decline from a short-term. Over the last 30 months, it's been positive. Gone up, but you can see in the last year or so it has gone up and down, and the short-term view is that the dollar relative to other currencies is in a downward decline. Gold is coming back. It had a negative week a couple of weeks ago, and then it went up a little last week, and again up this week, and you can see that. So from trajectory for about 14 months is that gold is in an upward trend. Same thing with silver. It moves a little differently. It's highly correlated, but it moves a little differently. And for the last couple of weeks, it has also gone up. So, and for the last 14 months, positive. The relative strength of this is that when this goes up, it favors silver. When it goes down, it favors gold. Just the relative to each other, not an absolute chart. So because at the very end, the very far right, you can see a little tick down, it favored gold for this week. But even though both were positive. Bitcoin continues to rip, and it's been a very good year for Bitcoin and a positive week. And you can see that from the trajectory of the black arrow and the little tick up at the very end. So I would say the view on Bitcoin is into 2024, I expect a positive year this year. If I had to be committed to anyone to say making any prediction, the only prediction I would make is I think Bitcoin is headed higher for 2024. That is not going out on a limb very far if you follow Bitcoin. But anyway, that's what's going on there. Volatility has been declining because the market has been going up. So negative volatility has been diminishing, which means the market is going up. And you can see that from the black arrow pointing down. The red arrow at the end also pointing down shows the short-term trajectory also down, positive for the equity markets. However, at the very end, you will see a little tick up because of last week. But other than that, I would say its volatility is very low, and it's down at 13. So 13 is a very low number on the volatility index. For the last couple of weeks, the Asbury 6 has registered one negative indicator out of 6. This week there are 2. This is still generally positive, 4 positive, 2 negative. Prior to 3 weeks ago, it had been several weeks where everything was positive. This is a cross-asset allocation, kind of a relative strength comparing one asset to another over different periods of time. For and the 3 columns to the right, the last week, the last month, the last quarter. So you can see, and the ones that hit all 3 of them, I will mention those. High beta is stronger than low volatility. Small cap, no surprise based on what I just told you, is stronger than large cap. Blue chips, this is the Dow Industrials, is stronger than the broad market, the S&P, again based on that relative strength chart. Technology is stronger than the broad market in all 3 time periods. U.S., is stronger than the developed markets, which is mostly Europe and Japan. Corporate bonds are stronger than government bonds. Corporate bonds are stronger than high yield bonds, and long-term bonds are stronger than short-term bonds. Okay, this compares the US versus the world. So again, we're looking at the ETF for that country. The US is SPY, SPY, and then there's an ETF for each country. It's listed in the second column from the left. And when you compare those two on a relative strength basis, either the US is going to come out for the last week, month, or quarter stronger, or the other country is going to come out stronger. So this compares those. So you can see the ones that outperformed the US for all three time periods were Chile, Peru, Mexico, France, India, and Australia. The ones that the US outperformed for all three time periods were the UK, Japan, Hong Kong, Singapore, China, and Thailand. Those were the ones that where the US was the strongest. So I put a relative strength chart to show you two of them. One where the US was strongest, and I just picked on the UK. This shows, if this goes up, this shows you how much stronger the US market, S&P 500, is compared to the UK. If it goes down, it shows that the UK for that week is stronger. So since May, you can see the degree to which the US has outperformed the UK, measured by the ETF EWU. Let's look at the other side of it. Where has the US been the weakest? The US has been the weakest, in my opinion, against Mexico. Mexico has been the strongest for the last 3 months. Look at that black arrow. That's pointing down. That's the degree to which the US is weaker than Mexico. If I flipped it around to show the strength of Mexico, it would be going up, indicating Mexico is a stronger market. And the ETF is EWW. Okay, gold and silver. Gold had a good week, but they both did. So gold outperformed silver a little bit. So it was up 1.6% for the week. Silver was up 1.1%, and the gold-silver ratio is 85-1. And gold price for the spot price, before you put the markup on there, is 2056, and silver is $24.21 plus the markup. When you look at buying a Monster Box 500, you can see that the cost of a Monster Box is $13,230. Continues to go up, and that includes a $2.20 markup, 26-cent markup over spot. This makes it on a 500 round purchase $26.46 per round, and on 1 tube of 20 is $26.96. So it's about 50 cents more per round. And I credit that to my son, Preston, who sells them at those prices. That gives you a benchmark that you can use wherever you're buying them. You can at least see what someone is selling them for. Okay, inflation and the economy. They tend to be non-correlated. They go in opposite directions. So the lower the rate of inflation, the more growth there is in the economy, and vice versa. I hope you've had a productive and healthy 2023. And I hope 2024 is the same for you in all areas of your life. Thank you for watching. And if you have questions or comments, leave them in the comment section below.